Hello, good morning, and welcome to another exciting time. We talk about business. It is Business 360, and my name is Blad Rukem. On Business 360 today, our gold climbs above $3,490 per ounce, reaching an all-time high as traders ramp up based on a Federal Reserve record this month, with market currently assigning a near 90% chance of a 25 basis points reduction. A multiple observation indicates that price indices and price as statutory perspective as self-haven demand also underpin precious metals amid lingering concerns over the Fed's independence and growing uncertainty. Looking at the uncertainty surrounding President Donald Trump's tariffs. First, let's go to the market, looking at the metal market and see what the prices of these metal commodities are amid the concern regarding gold. Price of gold gold price this morning stands at $3,479 per ounce, gaining 2.6 points, a 0.07 percentage appreciation. And silver price a downward by negative 0.87%. Copper price at $4.49 per pound, downward a negative 0.43%, while steel price at 3,059 Chinese yuan per ton, gaining 10% in this market. Well, multiple observation indicates indices, how the market fares this morning. Forward to other markets, the WTI crude oil futures rose near $65 per barrel today, building on gains from the previous session, amid growing concerns that ongoing Russia-Ukraine conflict could further disrupt global supplies. Both nations have escalated airstrikes in recent weeks, even as efforts are underway to resolve the war, with Ukraine's latest drone attacks reportedly disabling facilities that account for at least 17% of Russia's oil processing capacity. Prices are also supported by signs of economic resilience in China, a key oil consumer, where a private survey showed manufacturing activity expanded at its fastest pace in 5 months in August, easing the near-term demand concerns. Still, expectations of supply surplus are limiting further gains, keeping a lid on the outlook. Investors are now looking ahead to an OPEC Plus meeting later this week, where the producer group will decide whether to continue output increases beyond September. And now let's go to the energy market and see what the prices are, and afterwards we'll look at the agricultural market, the energy market this morning. Energy market indicates that crude oil price stands at $65 per barrel, gaining 0.846 a point or 1.31%. And Brent, which represents Nigeria's price benchmark, price level stands at $68 per barrel, gaining 1.23%. Natural gas falling at a negative 0.13%. Gasoline gaining 1.51%, and heating oil also gaining. Let's look at the agricultural market then. Agricultural commodities begins with the price of soybeans at $1,027 per bushel, falling by 7.08 points, a negative 0.68 percentage decline. Meanwhile, wheat price at $510 per bushel, gaining 7.88 points, a 1.57 percentage appreciation. A lumber price falling to 18 points. Palm oil at a price level of 4,456 Malaysian ringgit per ton, gaining 79 points. And now to China. The leaders of China, Russia, India, and some other nations met in Tianjin on Monday for the annual Shanghai Cooperation Organization (SCO) summit. Multiple observation indicates that it was founded 24 years ago. The bloc has expanded its reach. And now counting 27 members and partners across Central and Southern East Asia. At the event, President Xi Jinping unveiled plans for an SCO development bank, a cooperation platform for green and energy industries, and pledged $1.4 billion in loan over the next 3 years. President Vladimir Putin backed Xi's initiative, saying the SCO could take on the leading role in efforts to form a more just and equal system of global governance in the world. Xi also urged members to reject Cold War mentalities, rival power blocs, and bullying, instead defending the UN-centered system and working towards multipolar, fairer order of global governance. And now to India. The Indian government is planning to cut the goods and services tax (GST) by at least 10 percentage points on nearly 175 products ranging from talcum powder, toothpaste and shampoo to hybrid cars and consumer electronics, according to reports. Under the proposal, GST on personal care items such as a talcum powder, a toothpaste and shampoo could drop from 18% to 5%. Meanwhile, consumer electronics like televisions may see rates reduced from 28% to 18%. Small petrol hybrid cars are also potentially in line for a cut from 28% to 18%. The final list of products and rate changes will be decided by the GST Council, chaired by Union Finance Minister Nirmala Sitharaman, during its meeting on September 3rd to 4th. In Nigeria, the Nigerian National Petroleum Company Limited has secured a partnership with Nigerian private oil and gas firms on a production sharing contract for petroleum prospecting licenses. NNPCL disclosed this in a statement on Monday, noting that the event took place at the Nigerian Upstream Petroleum Regulatory Commission, NUPRC, at the headquarters in Abuja. The statement said the partnership concerns PPL's 2000 and 2001, marking a significant milestone in Nigeria's upstream oil and gas sector. Commenting on the deal, Group Chief Executive Officer of NNPCL, Basha Bayo Ojolari, noted that the partnership will improve energy securities and drive Nigeria's economic growth. Still in Nigeria, Nigeria's commercial bank, a Titan Trust Bank, has been absorbed into Union Bank. The merger was announced on Monday in a statement by the bank's head of brand and marketing, Mrs. Olufumilola Aloko. This follows approval granted by the Central Bank of Nigeria. The bank assured customers that while the merger is in effect, the details remain unchanged and services will continue uninterrupted. Titan Trust Bank had previously acquired an 89.4% stake in Union Bank, a move that led to the latter's delisting from the Nigerian Exchange Limited in 2023. Meanwhile, the Nigerian government has threatened to disconnect generation companies connected to the national grid in the country over their refusal to implement free government control across their generating units. According to the federal government, the move was to prevent national grid collapses. The Nigerian Electricity Regulatory Commission, NEC, disclosed this under an order which takes effect on 1st September 2025. The order was signed in August by the Commission's Vice Chairman, Musilu Oseni, and the Commissioner Legal, Licensing and Compliance, Dafe Ekbenei. According to the order, units that remain non-compliant for 90 consecutive days risk being disconnected from the grid entirely. It explained that FGC allows a turbine or generator's governor to automatically adjust output in response to changes in grid frequency. Meanwhile, Dangote fuel export surge amid foreign refineries shut down. The Dangote Petroleum Refinery has lately exported more fuel to foreign nations as Saudi Aramco and others in the Middle East, the Gulf nation, are closed refineries for maintenance. According to a senior officer at the Dangote Refinery, the $20 billion Lekki-based plant exported large volumes of premium motor spirit, petrol, aviation fuel and diesel to other countries in August. The Dangote Refinery has supplied a 2 long-range cargo of fuel to the Mid-East Gulf region between June and July. According to Argus Media, a heavy refinery turnaround season in the Mid-East Gulf is expected to exacerbate an already tight gasoline market in the fourth quarter, prompting key regional suppliers to boost imports. Meanwhile, Nigerian importers will spend more on import this season as French shipping giant CGM has announced a $500 new peak season surcharge on cargo bound for Nigeria and other West African ports. The shipping line, while announcing the development via a post on its official website, has stated that the charge is applicable to cargoes coming from Northeast Asia, Southeast Asia, China and Hong Kong, and Maku SAR will take effect on September 15th and remain in effect until further notice. It added that the amount is only applicable to 20-foot equivalent units of containers and it's for a short-term contract. The company stressed that the charge is for dry and reefer cargoes. Reacting to this, a former interim national president of the Association of Nigerian Licensed Customs Agents, Mr. Pius Ujobono, blamed the Nigerian Shippers Council for a lack of understanding of the working of the sector. Cylinder oil sector. The federal government, through the Nigerian Upstream Petroleum Regulatory Commission, has signed a production sharing contract with Total's Energy and South Atlantic Petroleum for petroleum prospecting licenses 2000 and 2001. The blocks awarded in the 2024 licensing round cover about 2,000 square kilometers in the Niger Delta Basin. Total Energies will hold an 80% interest as operator, while Sopratro will take a 20% stake. The fiscal package features a $10 million signature bonus alongside production bonuses of 2 million barrels and 4 million barrels or their cash equivalent upon achieving output levels of 35 million and 100 million barrels respectively. And while the federal government of Nigeria, through the Debt Management Office DMO, has opened a new offer for subscription of its savings bond, providing banks, institutional investors and individuals an opportunity to earn attractive returns while boosting liquidity. According to the document filed on its website on Monday, the 2-year FGN saving bonds due September 10, 2025 carry an interest rate of 15.541% per annum, while the 3-year bond maturing on September 10, 2028 offers 16.541% per annum. Interest payments will be made quarterly on March 10th, June 10th, September 10th, and December 10th each year. The bonds, which are sold in units of 1,000 naira, have a minimum subscription of 5,000 naira and a maximum of 50 million naira per investor. Redemption is structured as a bullet payment on the maturity date, providing investors with a lump sum at the end of the investment term. According to the DMO, the bonds qualify as government securities for tax exemption purposes under the Company Income Tax Act and Personal Income Tax Act, making them suitable for pension funds and other institutional investors. They also qualify as liquid assets for banks in calculating liquidity ratios and are listed on the Nigerian Exchange Limited. And now to the Nigerian Exchange Limited. The Exchange Limited has suspended trading in the shares of 3 listed insurance companies for failing to file their audited financial statement for the year ended December 31st, 2024. The suspension, effective September 1st, 2025, affects Regent Airlines Insurance PLC, International Energy Insurance PLC, and Universal Insurance PLC. The action follows the default filing rules under NJX's rules for filing of accounts and treatment of default filing, which stipulate that an issuer that fails to submit the relevant account at the expiration of the cure period will receive a second filing deficiency notification, have trading in its securities suspended, and be reported to the Securities and Exchange Commission within 24 hours. And now we'll go on a quick break, and when we're back, Business 360 continues looking at global economic standings and the markets. Don't go anywhere. Welcome back. It's Business 360 and my name is Bladon Kim. And now looking at global economic standings and the markets. First, we look at Thailand foreign tourist arrivals. Thailand foreign tourist arrivals fell 7.16% year-on-year in the first 8 months of 2025, according to the Tourism Ministry. A total of 21.9 million foreign visitors were recorded during the period, with China remaining the top source market, contributing 3.1 million arrivals. Last month, the State Planning Agency revised down its full-year forecast for foreign tourist arrivals to 33 million and down from 37 million. For comparison, Thailand welcomed a record 40 million visitors in 2019 before the pandemic hit global travel. Recent data also showed that Thailand's economy grew 2.8% year-on-year in the second quarter of 2025, easing from 3.2% in the first. The accommodation and food services sector saw notable weakness, expanding just 2.1% in the second quarter compared to 7.2% in the first quarter, largely due to declining inbound tourism and slower domestic travel. A foreign tourist arrival in the second quarter totaled 7.136 million, down 12.2% from the same quarter last year. Meanwhile, domestic tourism grew by 2.1%, slowing from a 2.6% growth in the first quarter. And now to the forex market. Iran currency has been sharply depreciating again as European powers are pushed to reinstate United Nations sanctions against the country amid stalled diplomacy and fear of war with Israel and the United States. The US dollar hit a price of more than 1.06 million reals, Iranian currency, in Tehran's open currency market on Monday, slightly higher than before Tehran and Washington started mediated negotiation in April. The Iranian government and central bank have once again said the sharp decline of the embattled national currency is not due to a fall in economic activity and rather reflects a psychological reaction to deteriorating political conditions in the country. France, Germany and the United Kingdom and the remaining European parties to Iran's 2015 nuclear deal with world powers have triggered the snapback mechanism of the accord that could automatically reinstate UN sanctions lifted in exchange for curbs on Iran's nuclear program. The European allies have now effectively given Iran a one-month deadline to negotiate an agreement, and that could defer snapback for a year or less. And now let's go to the market, the Euro-USD market. First, after all, we'll look at the state of the Naira, the Euro-USD market. The state of the Naira afterwards. The Euro-USD market indicates a price level of 1.16, a point mark, while the euro falling against the US dollar by negative 0.52%. At the pound against the US dollar, price level stands at a 1.32 point mark, and the euro, talking about the pound against the US dollar, the pound against the US dollar, the pound falling by negative 0.88%. The Aussie also falling against the US dollar. The US dollar seems to be quite strong against the majors. And now let's also look at the state of the Naira, the US dollar against the Naira. A US dollar against the Naira comes with multiplicity of standings. Let's look at the US dollar against the Naira. And in that light, also look at the cryptocurrency market. The US dollar against the naira, a price level stands at 1,529 naira to the US dollar. The dollar are falling against the naira by negative 0.03 percentage decline, not much, and the euro against the naira 1,788 naira to the euro falling by negative 0.24%. The pound against the naira 2,068 naira to the pound, and the pound dropping negative 5 points against the naira, a negative 0.25%. The naira seems stronger against the majors this morning. Quickly to the cryptocurrency market. A crypto market indicates the price of Bitcoin at 110,451 US dollars. Bitcoin gaining 1,197 points, a 1.1%. Ether at 4,397 US dollar, gaining 83 points, a 1.93%. Binance, Cardano, Solana, Ripples all gaining, and Cardano, Solana, Ripples gaining the most, 2.99% and 3.1% and 2.27% respectively. Well, let's move to the stock market and see the values of the stocks. Well, first, the Shanghai Composite slipped 0.4% to around 8,360, while the Shenzhen Component fell 0.7% to 12,740 today, with mainland stocks ending a three-day winning streak as investors booked profits. Traders also kept an eye on the Shanghai Cooperation, the Cooperation Organization Summit in Tianjin, where China is seeking to cast itself as a global mediator amid persistent trade frictions, and geopolitical tensions. Beijing also called for deeper collaboration on artificial intelligence. On the corporate front, notable decliners included China Northern Rare Earth, a negative 2.6%, East Money, negative 1.6 billion naira lost. The Nigerian Stock Exchange, billion naira lost. The Nigerian Stock Exchange opened the new month on a negative note as the market lost 363 billion naira in value at the end of the first trading day. Investors traded a total of 407.95 million shares in 33,843 deals, corresponding to a market turnover of 14.77 billion naira. Compared to the previous trading day on Friday, August 29, Monday's trading showed a 6% decline in volume, a 42% improvement in turnover, and a 32% increase in deals. The current market capitalization of the NGX now stands at 88.4 trillion naira. The benchmark All-Share Index, as you say, shared 573.31 points, or 0.41%, to close at 139,722.99 points, and this represents a one-week loss of 1.21%, a four-week loss of 3.02%, but a year-to-date gain of 35.75%. Let's look at the top gainers and the bottom losers in the Nigerian Stock Exchange. Well, the top gainers, leading gainers, was Sovereign Trust Insurance, which gained 10% to close at 2.86%, 2 naira rather 86 kobo per share. On the losing side, Etana led the decline, shedding 10% to close at 34 naira 20 kobo per share. In terms of trading volume, FCMB Group topped the activity chart with 55.8 million traded shares. It's much of the outlook we have in today's Business 360. Thank you for being a part of it. My name is Blyden Kim, and thank you for watching.